Welcome to This Week in Money. I'm Jim Goddard. Today, what kind of impact are lower crude prices having on the markets? CIBC Wood Gundy's Ross Clark tells us it depends which side of the border you live on. We're pleased to have New York Times bestseller Marin Katusa on the show. He discusses his book, The Colder War, and how East-West relations could impact your way of life. We talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Welcome to This Week in Money, Ross.
And it's nice to be back from a few weeks off, and look what they've done to the market this week.
Wow. Yes, you come back from Maui, and it looks like somebody's been doing some surfing on the markets as well.
And we've got a tale of just really two distinctly different marketplaces out there. You've got you've got the big cap names, the industrial names, the transports, the high techs doing exceptionally well. I mean, we come off that mid-October low, rallied to U.S. election day, which is normal, and then instead of just taking a good pause and a bit of a breather, those big cap names, as you would see in the S&P and the Dow, just continue to trek along to the point now where they're actually up to the top end of their rising channels when we look back over this last 5 years from the 2009 bottom. From a perspective that I would look at here, support is probably fairly close underneath us, maybe 3 or 4% underneath as far as the Dow and the S&P are concerned, for maybe any pullbacks that we might see in the short term. Whereas we've been having deterioration in a lot of the other sectors of the market. Looking at the bond aspect of it, you can see it in the credit spreads where high yield markets topped out earlier this year, and they've been stair-stepping down in price, so yields have been going up. And on the other side of the coin, the government bonds and the investment grade corporate bonds have been stair-stepping up as money has moved to them. So you're getting this clear divergence in terms of money looking for progressively safer and safer places to be. And so as money has moved around the world, in particular to U.S. with that strength in the U.S. dollar, the large caps have really enjoyed it, and these credit spreads are such that the small cap names, and if you look at like the Russell 2000, came off that mid-October low very nicely, but you hit that U.S. election window there first week of November, and they've done nothing since. So while the, say, big cap names are trucking along to the upside, the small cap names are just looking for some bids to come in, and there really isn't anything right now. They're on the heavier side. And that's one thing we want to look at as an opportunity as we move into December. We start to look for the small cap names, the Russell 2000, to present a really nice buying opportunity by the time you get into the middle of December. And over the years, we've come up with some nice parameters in terms of how to identify an interim low in that mid-December window. And, we'll hopefully in the next week or two, we'll be able to narrow in to help people out in terms of a nice play for a Santa Claus rally into January.
Of course, there's a little guy, major player in the oil market, Mr. OPEC, as I like to call him. Well, he decided that, heck, we're not going to slow down production at all to support prices. In fact, maybe we might even turn up production. How's that affecting the market?
Well, that's the other side of the equation, because you've got, as I say, an area where the money is flowing to and another one that it's flowing out of. And with that OPEC announcement, by this point everybody's aware that oil prices have dropped clearly into the mid-60s. We close off the week here at $66 for West Texas Intermediate. This is down literally 10% from Wednesday in the U.S. Prior to the Thanksgiving holiday and the OPEC announcement. And market has gone into this real tailspin, sort of a waterfall effect. Without any positive news, you would anticipate that the news itself, or the lack of news, would bring out that last wave of sellers, the capitulation mode starting to kick in. And on my models, I do have some means of measuring these extremes, and in crude oil, the weekly charts have been into exhaustion mode. This is now the fourth week in a row. Back in 2008, when we had that drop from 147 down to 35, the last 5-6 weeks of that were capitulation mode. So we're getting into that type of category where we're seeing a really big extreme. And if you look at simplistically the relative strength index, which is available on virtually every website as a means of analysis, the monthly RSI now is down to 30. That's lower than it was at the 2008 bottom. It's the equivalent of what we saw back in the 1998 and 1994 bottoms. So it would suggest to me that we're getting very close to an interim low, at least as far as the crude oil market is concerned. There might be another 5 to 10% here, I would think, at the most. Seasonally, we're coming to what is normally a low, and if we look at the stocks in terms of the producers, the explorers, you can see that the initial phase of this decline, the small cap names came under pressure the first, and now we're seeing the big cap names, truly sort of the trophy stocks starting to feel pressure. As liquidity in the small cap stocks has disappeared, the players, investors have been looking for liquidity. They've had now to go to the bigger names, and they're really feeling the pressure here. And that's typical of the tail end of a break. We couple that with the fact that from a tax perspective, people are going to be looking at stocks that are offside this year, where they can take a tax loss and use that against previous capital gains that they might have had. And so that there'll probably be, between here and the middle of December, some pretty good opportunities on some very oversold stocks, in particular for a good bounce back into January. And everybody's throwing out the baby with the bathwater right now, so I think it'll be a good opportunity to look for stocks that have good value in the resource sector that have just been put under pressure because the sector has been under pressure.
Will low gasoline prices last, or is this going to be a brief reprieve?
I don't follow gasoline that closely, but what you would normally have on a break like this, as far as the oil market is concerned, you would spend the better part of a few months basing out before you would have anything of big significance on the upside. So I'm thinking, if oil were to bottom out in the mid to low 60s, probably bounces back into the high 70s, maybe kisses 80. That would allow the gas prices at the pump to probably stay down in the range that they are right now.
Ross, thanks a lot for speaking to This Week in Money.
More than welcome.
Ross Clark has been our guest. He's an investment advisor at CIBC Wood Gundy. You can contact him at ross.clark@cibc.ca. After the break, Marin Katusa next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marin Katusa, Chief Energy Investment Strategist at Casey Research. Welcome to This Week in Money.
My pleasure.
Marin, I know you're very proud of the new book you've just written, The Colder War. Perhaps you can tell us something about it.
Yeah, my book, The Colder War, is actually just cracked the New York Times bestseller list in both categories. So that's a strong signal of support in the Americas that what we're really trying to get down on for the energy markets is where Russia, under the leadership of Vladimir Putin, has reestablished itself as a global superpower, and more importantly, has signed strong alliances with other emerging superpowers such as China to work in concert against interests of the U.S. globally. And in the book, we cover, how we got to where we are presently, and where we expect things to move forward. We discuss why we think, OPEC will still be aligned with the U.S. in the near term, but where the fractions within OPEC are being created, why we expect oil to go down. And, the book was published November 10th, and when we finished writing it, oil's moved down over 30% since. We also talk about what's going to happen in the uranium markets and natural gas, and also the resource markets, and how, where we are in the economic cycle today, and how to protect your portfolio, and more importantly, profit from the Colder War.
It wasn't that long ago that Russia was getting along just fine with the rest of the world. What made Mr. Putin decide, I'm going to go and beat up the Ukraine and make noises about other things?
Well, it wasn't Russia that changed its mind, or Vladimir Putin that changed its mind. They're reacting to the external forces from the failed American foreign policy under Obama's watch. If you actually look at what's going on in Ukraine, or more importantly, look at NATO's expansion, we cover all these aspects in the book, The Colder War, and I recommend all your viewers go to the website, colderwar.com. We've got many videos we've made to make it simpler for people to understand really what's going on. There's 4 mini documentaries, and we cover all these different aspects about what really is going on. And the media in the West is demonizing Putin, but that's not really the full spectrum of what's going on. And what Russia's now doing is, working with China in the emerging markets, and they're planning for a 50-year cycle. And our media makes it as if, Russia's going in and conquering Ukraine. That couldn't be further from the truth. So we get into all those facts in the book.
Why do you think the Western media hasn't picked up on what caused this, or are they just in the pocket of the government?
Well, you have to ask which media. The mainstream media is, it's always going to be from the American perspective, even the Canadian media. But there are media outlets, I was on CNN and, Bloomberg. I have to say, Bloomberg gave a real fair representation of what I was talking about. They were one of the first to put up their hands. CNN, I was on their main program, and they still don't get it. So it really depends. Who are your sponsors? Who's the network owned by? Is it Democratic? Is it Republican? If you go to Fox, you're going to have a different viewership than you have at CNN. So it really comes down to many factors. But, the mainstream media in the West, the major newspapers and all that, they're looking at it through the perspective of the American perspective. And that's why we get a lot of partial information. For example, all our media was talking about how, during the G20 summit, the Australian Prime Minister was going to front shirt Putin, Prime Minister Harper's comment of, fine, I'll shake your hand, but get out of Ukraine. But yet they didn't report about how the BRIC Bank finalized the details to be a competitor to the IMF. They didn't talk about the new contracts China and Russia are now signing for oil pipelines, for new gas deal. China and Russia are about to finalize $1 trillion deal. Not a $400 billion, but $1 trillion deal. That's the biggest deal ever in history. So these are all facts that you have to really dig down to understand, but the Western media is very different. It's also about selling newspapers and advertising space. It's a creation of public perception, definitely. That people can't argue with. I gave a talk at Harvard. It was a sold-out talk at the Harvard Book Club last Tuesday, and there's no question that there's a lot of people in government and the professors, the intellectuals, who recognize what I'm talking about and agree with it. It's not mainstream yet.
Who's the better strategist, Putin or Obama?
Oh, without a doubt, it would be Putin. Look, let's take, since the Arab Spring, look at the comments Obama's made. You know, he's been tripping over himself, whereas Putin's stood firm. He's increased his exposure and leverage. Look at what happened in Syria in 2013. Obama wanted to go to war. He talked about the red line. Putin challenged him, and even members within the U.S. government agreed with Putin. And more importantly, the people that the U.S. and Saudi Arabia were funding in 2013, the Syrian rebels, today the same individuals supplied with American military equipment, the Americans are now trying to fight, and they're called ISIS or ISIL in Iraq. So Putin was shown to be right there. So you look at what's going on, there's no question. Even the average American or even the Western mainstream media would agree that Putin's a much better strategist.
Does Obama have any right to do that, considering he's out of office in 2 years?
Well, that's just one example of Obama's failed foreign policy. You look at what's going on in Ukraine, that's another example. Look at Iraq, another example. You know, things are going to get a lot worse in the Middle East and Ukraine before it gets better. We have the potential of the South China Sea bubble that's about to erupt. There's a lot of problems globally. You know, Obama's now kind of content. He's going to ride out into the sunset. He's had 2 terms under his belt. He's more focused on his speaking engagements and his books to be done. And, you know, he's not really at the level of the other leaders when it comes to strategic planning or foreign policy. The key for America is the next president. Will it continue the failed foreign policy that Obama has set? Or will they try to work in conjunction with the emerging markets to kind of bring peace to the Middle East and Ukraine? That's to be determined.
There's nothing simple about this, but if you could advise the new president, what would you tell them? How would you ask them to handle this dispute?
Well, number one, you know, it depends which conflict you're talking about, because in certain conflicts they're aligned. They're, you know, look at Iran. If you look at Iraq, let's take Ukraine, for example. Well, if I was advising the president of the U.S., I'd say, well, first of all, NATO has been expanding, so the Russians are correct. The EU 28 has been expanding, so again, the Russians are correct. They don't want you meddling in their background, in their, you know, foreign satellites. So maybe you have to come to the table and treat Russia as an equal. When you look at dealing with China, treat them as an equal and come to a organized, you know, agreement where everyone kind of gives up a little bit but comes to a solution. I just don't see that happening in the next couple of years. And personally, if you look at where the numbers are in the U.S. media, I just don't see a leader coming in who understands what needs to happen, and it's going to get worse. And that's good news for us, unfortunately, because if you understand what's going on in the colder war, you will make a lot of money from it.
Well, something that has happened, OPEC has agreed to continue pouring oil into the world markets. How is that going to affect the economies of Canada and the U.S.?
Well, first of all, we've been saying for months that OPEC will not cut production, and why should they? You know, why shouldn't the U.S. shale producers cut production, or why not the Russians? You know, you take Saudi Arabia, the U.S. and Russia produce just as much oil as Saudi Arabia. Why does the world expect Saudi Arabia to cut back production? Number one. Number two, it's going to impact the Canadians significantly. $60 oil, you're going to see major OPEX programs cut back. You're going to see yields be cut back. There's going to be a lot of selling pressure in the oil patch. Same thing in the U.S. A lot of infrastructure projects are going to be rethought out because they're not economic. You know, we're going to see lower oil prices. So it's going to definitely impact the producers, and we'll get to a point, as we have in every bear market, that the cure for low prices will be low prices, and things will turn around, but it's going to take a little while. So it's going to definitely impact Canada.
More with Marin Katusa next on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. Our guest is Marin Katusa, Chief Energy Investment Strategist at Casey Research. And of course, we've been discussing your new book, The Colder War. Now that we know that the lines are being drawn again, it is a new Cold War, and it's happened almost in the blink of an eye. Where do you think that technology will play in all of this?
Well, technology has been a game changer in the oil patch. Fracking, super pads, super fracs, multi-stage fracking. It's taken oil production from less than 5 million barrels to almost 10 million barrels. That's been a huge game changer. North America has been where all the growth has been in the non-OPEC countries. So technology from a resource standpoint is going to continue to be more important because with lower prices, the efficiency in American innovation, North American innovation, including Canadian innovation, will help these producing companies be economic. Without technology, you'll see very little growth in the oil patch. Look what's happened to Mexico. The Cantarell field's gone from 3 million barrels a day to 600,000. That's a huge decline. Why? Because they weren't investing back into their fields. They weren't using modern technology. They were, funding their social programs. Eventually, you reach a pinching point, and now they're opening up to the North American markets. Why? Because they need number one, technology, number two, money, and the know-how. So, technology is critical.
If oil prices continue to drop, where do you see things going?
Well, as we've been saying for a year, $65 is a sure bet we're going to touch. And at that point, it's going to be interesting. We'll see a lot of decrease in production, growth. But I think we could see $60, $65 oil trading range for a while.
In your book, you mentioned how important pipelines are to get North American product out to international markets, but yet you seem to have a very high public resistance to the Kinder Morgan pipeline, the Keystone XL pipeline. Are people and governments letting sentiment rule what should be sound economic decisions?
Definitely. Politicians wave with the wind. So, unfortunately, what I would love to see, and here's a breaking news story for you, the best thing Prime Minister Stephen Harper could do to his legacy is make some serious changes before the next election. Because if he really wants to make a change, he should bring in the legislation for First Nations rights and really what's allowed in environmental issues where science talks, not politics. Not mainstream media, not the NGOs, not the environmental agenda. It's important that people recognize that these companies do put the environment as a priority, that they do use science as a priority, but, when it comes to breaking the law and not following the rule of law, that's where you lose a lot of time for these protesters. Follow the rule of law just like the companies do, and let's find the best solution. I call it the sensible solution. Or let's depend more on rail and have more accidents. Let's depend more on existing infrastructure, which is nowhere near what the new infrastructure will be. So, society has to stand up and say, what's the sensible solution? And again, all parties need to come to the table. And I don't see there being a near-term solution for that. Just as when I debated the founder of Greenpeace, and I said, look, you guys can ignore the science all you want, but I'm not investing in it because I see it being delayed. And I first said 3 years ago that Keystone XL will be delayed under Obama's administration until the Republicans take the House, which in the new year they will. They'll pass the Keystone XL. But now the problem is at $60 oil, does it work? That's a question. People have to figure that out. It's an interesting change where at $100 oil, everyone has a comment, but at $60 oil, maybe there's no reason to comment because it's not economic anymore.
Are some of these protest movements funded by foreign entities? For example, countries in the Middle East who have an interest in keeping oil flowing but cutting off our oil and gas.
There's no secret about that. That's a well-known fact, and that part of the reason what I found interesting is the Russians want you to register your NGO and where your money comes from. For you to invest in a stock or write a check or have a bank account, you have to prove where the money is coming from, but ironically for NGOs, you don't. So why shouldn't the NGOs have to report where they get all their money from? Is it from the Middle East? Is it from a major U.S. company that doesn't want competition from the Canadians? Is it from the Russians? I don't know, but this should be legislation that gets approved. I
wonder about some of these movies that decry fracking and so on, but you find out who funded them, it wasn't a U.S. production company, was it?
No, exactly. So, these are all things that need to change. So, I agree. Look at the Promised Land. It was funded by Qatar.
Will the Arctic be a big player here if the Colder War goes ahead?
In the longer term, yes. What people have to understand, the Colder War is not a battle. The Colder War is much more complicated than what people are phrasing as the new Cold War. There's a big difference. The first Cold War was about capitalism versus communism. The leaders were America versus the Soviet Union. This is much more complicated. It's the established world of the EU 28 and America and Japan, the first world versus the emerging markets, which, when I say Russia's, the prime influencer, under Putin's leadership, you look at the BRIC Bank, you have China's interest, you have India's interest. For example, today, India and Russia are now working together, signing major energy deals and military deals. So the Colder War is going to be many, many, many years in the making. And yes, the Arctic is going to be very critical and very important because these are world-class oil and natural gas deposits. These are deposits that have billions of barrels of oil in them. And that's why companies like Exxon will do whatever they can to work with the Russians to get into those. If the sanctions continue against Russia, Russia will just work closer with the Chinese. So a company like CNOOC will come in and fund the big ticket because they need a secure, stable supply for long-term oil production.
Were these sanctions against Russia for its alleged involvement in Ukraine worth it? Have they worked out?
No, they haven't worked out the way the EU 28 has hoped. What it has done is put fast forward with the negotiations with the Chinese and Russia. What it has done is made a competition now for Russian natural gas with China. If you look at all of the natural gas that the EU gets from Russia, more in 10 years is going to be going to China. That's going to hurt Europe down the line. Countries like Germany are getting adverse effects where 300,000 jobs are directly lost now and at risk because of what's going on between Germany and Russia. Germany and Russia have a lot of industry synergies. 40% of their oil and natural gas comes from Russia. But more importantly, people forget for that last 25 years, America gets 10% of their electricity generated via Russian nuclear fuel. That's 1 in every 10 homes. How come there's no sanctions on that? So at the end of the day, the Europeans are starting to ask questions, and Russians about the Russian sanctions, saying, hey, is this really worth it? Because it's hurting us a lot more than the Americans.
And I just saw an article, too, about dairy farmers in the Netherlands, pork producers in Canada and the U.S. are losing out on billions of sales to the former Soviet Union.
Yep. Those are serious issues.
And the Russians have said, well, we're a tough country. We can handle, okay, so we don't get yogurt for a week. We can deal with that. But I think in the long term, we had such a good trade relationship going. What kind of long-term damage has happened, even if we try to change things around right now?
Significant long-term damage. Our media demonizes Putin and talks about how he's not liked in Russia. The reality is he's more liked in Russia now than ever before. He's the Slavic warrior. The Russians are proud that they have a leader who can stand up to the West and not be bullied by America. You have to understand the Slavic mentality. Again, people forget that the Russians were a serious fighter against the Nazis. More Russians died in World War II fighting the Nazis than all the other allies combined. These are serious issues that people forget. 1 in 7 Russians died in World War II fighting the Nazis. So, these are proud people that the West has, not necessarily recognized their role in fighting the Nazis. And even worse, you had the Prime Minister of Great Britain, Cameron, come out and say, compare Putin's Russia to the Nazis. Then I went on CNN and said, this is absurd, this is ridiculous, how can you say that? And then he had to retract his comments a day later. There's a lot of misinformation in the markets. And what this is really doing is pushing the emerging markets to work closer together than ever before.
Do you think this will ever turn into a shooting war? Is there always that danger or possibility?
Well, it already has. Look what's going on in Ukraine. Tell someone in Ukraine it's not turned into a shooting war. Look at Iraq. Look at Syria. It hasn't turned out to what we call a war like World War II, where, you have nations going to war at each other, but this is now the new modern warfare. You have drones attacking. It has. That's the answer. It has, unfortunately. And unfortunately, it's going to get worse.
We'll have more with Marin Katusa next on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Marin Katusa, Chief Energy Investment Strategist at Casey Research and proud author of the New York Times bestseller, The Colder War. What are the bright lights you were saying about investors looking at where do I put my money right now with oil taking a big dump? Perhaps uranium still might be a key player.
Well, without a doubt, it's a key player. 20% of America's electricity is generated via nuclear energy. You look at China just finished their second new one of the year. There's no doubts that Japan will move forward with their reactors. And, even last month, at the end of October, we were at the New Orleans Money Conference, and I said, look, you have to have a little bit of money exposed to the uraniums. And in our newsletter, we've done incredibly well with a company called Uranium Energy Corp, where the stock was down at around $1.10, $1.20 in October, and it hit near $2. So, yes, there's a lot of bloodshed in the oil match, but there's always a bull market somewhere, and we've done incredibly well with Uranium Energy Corp. Where even George Soros took a chapter out of my book and essentially announced that they're buying Uranium Energy Corp now. So, look, if you invest in the right places, in the right companies, with the right management, with the right assets, why I like UBC so much is they're unhedged. They're the only unhedged uranium producer in the world. So uranium's gone from $28.50 a pound up to $44 a pound, and now it's moved back to $40 a pound. A company that's unhedged will have much more of a impact than a hedged producer. More importantly, though, the long-term price of uranium is now up at $49 a pound. It moved up 10% this past week. So there's a lot of strong signals for uranium in the market. So, again, pick right, sit tight.
BC's government has put a moratorium on uranium exploration and uranium mining. A poor move on their part?
Sorry, I couldn't hear who?
Well, the BC government has banned...
BC is insignificant in the uranium world. It's never had a uranium mine, and it never will.
Although we do have radon gas in people's basements.
Yeah. The reality is that the BC government had to give Boss Power, $30-something million because of their deposit, because they basically put a moratorium on it. But the reality is that there's going to be no uranium production in BC. In Canada, you'll see it in the Athabasca Basin. In the past, it's had it in Ontario and Elliott Lake. Elliott Lake produced just under 200 million pounds in the 60s and 70s, but it was subsidized by the Atomic Energy within the government. But really, the place to be for uranium in the U.S. is what I call WISER uranium, warm ISR, in situ recovery. It's the lowest cost production of uranium in the world.
Russia is a huge player in the uranium business. Who's its competition?
Well, its competition would be Canada, Australia, and the number one producer of uranium in the world is Kazakhstan. They produce about 40% of the world's primary uranium production, but all of that goes back to Russia to get enriched. So you can't just produce yellowcake and send it to a reactor. And Kazakhstan's infrastructure is built by the Russians during the Soviet time, and all of the key players within the Kazakh uranium industry are Russians. So you look at the Russian enrichment capacity. Russia has almost half of the capacity of the global enrichment capacity. They have almost half of the world's uranium resources within their sphere of influence, and almost half of the world's production within their sphere of influence. So the Russians are definitely the controlling player in the uranium sector.
Is there any way to counter it, or there's just no substitute for it?
There's no way to counter it, but there's ways to profit from it. And I just gave you an example of one where we've made essentially a double in a market that people are hurting in the resource market. So, it's too late for the American infrastructure to compete. For example, in the early 1960s, America produced just over 40 million pounds of uranium in the U.S. In 2013, they produced just under 4.5 million pounds of uranium. So they've decreased by 90%. The U.S. imports over 90% of the uranium they consume. And still, half of that comes from Russia. So, what is the way to profit from it? Well, produce a material at a competitive price that the Americans need. And that's in the Athabasca Basin and in Texas.
Do you think just because of that, there's a chance the U.S. and Russia will shake hands, make up, and go back to business as usual as it was about 3 years ago?
No. We're in a colder war, and for definitely it's going to get worse. And there's just too many moving pieces right now. I wish it would be that simple, where Obama shakes Putin's hand and everyone lives happily ever after. But no, that's not the situation.
Well, of course, the Republicans want to go to war over every little incident in the world. If there's a Republican president, are they going to be sending troops all over?
Well, it's going to be interesting. That's what everyone says, but, it all depends on the election. They run the House now, so let's see what happens in the new year. But there's no question that America's increasing their now presence in Iraq. They're going to be increasing their presence in Ukraine. And, there's one way to kick a deflation, and that's war. And that's always been that way, unfortunately. War is very, very bad. It's awful. But it kicks deflation.
Is America trying to be self-sufficient in oil then because they think oil supplies could be cut off if there is some kind of conflict?
Well, it all comes down to at what price. At $50 oil, America cannot become energy independent. But at $65 oil, if we keep seeing the innovation in the shale sector and improvements in production, they will rely less on Middle East. If they can build the pipelines and get the heavy oil from Canada to blend with their light oil from the shale oil, the Middle Eastern oil's less important to America. That will create a power vacuum in the Middle East, and when you have a power vacuum, changes happen, and that usually means war. So that's why there's going to be more political instability in the Middle East.
So even if they beat up ISIS to a point where they're not really a big factor anymore, whether that's possible or not, there's always going to be somebody else trying to squeeze in, isn't there?
Well, what people have to understand, ISIS has now joined forces with Al-Qaeda, and the U.S. have not been able to get rid of Al-Qaeda. They've actually grown in the last decade. ISIS has grown in the last 2 years. So things are going against the American agenda, against the American foreign policy in the Middle East.
Wow. So if you're just taking a look at a mega picture of the world, the power map is going to be shifting. How fast will that shift take place?
It's already shifted. Henry Kissinger came out and agreed with the concepts of my book. Gorbachev came out and agreed with the concepts of my book. You got, changes have already happened. There's a new world order out there, and unfortunately, when the judgment day for the petrodollar approaches, the way of life in America will be gone.
And what happens when that takes place, and how soon could that happen?
I think you're going to see within the next 25 years, it's going to be a real change to the petrodollar. I was on a national television program with a bunch of well-known professors, and they were talking about how that will never happen, and oil will never be traded outside of U.S. dollars. And I shook my head and I said, what are you talking about? It already is. Iran is trading with China in non-U.S. dollars. Russia's deal with China is non-U.S. dollars. Total came out and said they're going to do this deal in non-U.S. dollars. The French have turned their back on the petrodollar. So the reality here is that it's started.
And again, too, I've heard from allies who say they were manipulated into taking on these sanctions at a great loss to their own economies. And then they look back and hear the vice president saying, hey, we duped these people real well.
Unfortunately, it's going to get worse for the European nations because cheap Russian energy, cheap Russian oil, cheap Russian natural gas is good for the European economy. Now they've set the stage for that cheap gas to be sold to China, which means higher energy costs for Europe, which is bad for their economy.
So many people say, well, we need a strong Chinese economy because there's so much trade between North America and China, but how dependent are they on us?
How dependent is China on Canada or
North America?
China's moved away where they're starting to grow domestically, so I don't think that, in China's future, remember the Chinese government's planning for 50-year cycles. We're nowhere near as important as we were a decade or two ago.
What about Canada's trade agreement with China that was recently signed?
Very, very small in the big scheme of things.
Is it going to help Canada a lot, or is it a false hope?
Well, if we can build the pipelines and get the oil to them, it'll help us. If not, what are we going to do? Keep buying Chinese trinkets?
And they only need so many chopsticks from us.
While they import more Chinese goods. So the reality is we need to produce things. And what are the things that Canada produces? We're abundant in resources, and we need the infrastructure to be able to export that. Unfortunately, right now for Canada, coal is down, copper's down. The thing that's saving the Canadian resource sector is a weak Canadian dollar. So, even though we're all Canadians, we're insignificant to the big Chinese future. That's the reality.
If that's the reality, how does a Canadian and how does an American actually protect themselves with such a rapidly changing market?
Well, that's exactly what we get into in the Colder War. We talk about, look, what's changing? How do you benefit yourself? We've stated uranium and how to be very careful in the companies you invest in. We're doing very well in that sector. Our oil picks are doing very well. Be careful about LNG. I think LNG is going to be a big bubble waiting for a pin to pop it. A lot of people are misconceived that, the BC LNG is going to be the greatest place to put money. I've been saying for years, be careful. The trend is my friend, and it's showing people that now it's gone from a price maker's environment to a price taker environment, and things have really changed. So you have to protect yourself. It's your own responsibility to protect your portfolio and your family's standard of living, and more importantly, there's opportunity to profit from the Colder War.
Yes, for every downturn, there's somebody else gaining and going up. How would you advise someone to find someone who could maybe point them in the right direction?
Well, look, my book cracked the New York Times bestseller list, so I would start there. I would educate yourself on what's going on, and don't just follow, the Globe and Mail or the National Post or the mainstream media, what you see on CNN or BNN or whatever. Educate yourself. That's the key. Understand really what's going on. Follow the guys who are investing big money and doing well, and, diversify yourself and profit from the Colder War.
Marin, is there a website somebody could go to find out more about where they can, for example, get your book, The Colder War, and more about KC Research?
Sure. The cheapest place to get the book is Amazon.ca. Amazon controls the book world, so it's cheaper to get it there than a bookstore. That's where I would buy the book if I haven't bought it yet and I was a viewer. I would also go to the colderwar.com website. We've got many videos up there, lots of research. We've got endorsements on the book. We've got a lot of info there for free on the site. And that's where I would start with. And then also if you're more interested in the KC Research website, please go there. There's lots of information there. A lot of daily articles and research that's for free, and you can try a 3-month free trial.
Thank you very much, Marin, for being with us.
It was my pleasure. Thanks a lot.
Thanks for being on This Week in Money. My guest has been Marin Katusa, Chief Energy Investment Strategist at KC Research. That wraps up our show for this week. I'd like to thank our guests, Marin Katusa and Ross Clark, and thank you for listening. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.